Finances, where Greg and I bring you timely and useful information on financial matters that affect your life.
In this segment, we're looking at the topic of refinancing.
Greg, why don't you explain what refinancing means?
Refinancing is another way of saying taking out a new mortgage on property.
And why would you want to do that?
Well, typically, homeowners refinance to take advantage of a lower interest rate.
So if your current mortgage rate is, say, 7.9%, and you could get a rate of 6.5%, it would be a good idea to refinance?
Generally speaking, yes, because you'd be lowering your interest rate by 1.4%. But there are other things you should consider too, which we'll talk about in just a minute.
What are other good reasons to refinance?
You can transform the equity in your house.
When you're deciding to refinance, if you're considering it, the first question to ask is, why am I doing this? Well, am I trying to take out more money for a home remodel, to pay off some credit card debt? There's some serious consequences to doing something like that. Or am I taking this out to get some more security in the mortgage? Perhaps I'm in a high rate of interest, a mortgage with a high rate of interest. Maybe there is an adjustable rate. Maybe I've got a balloon payment on my mortgage and I'm being forced to refinance. There's a lot of different strategies with it.
Refinancing definitely has its pros and cons, and you want to make sure you do your research before you refinance. Look for loans that have great interest rates, and also know yourself. If you refinance and take some of the cash out, for example, to pay off credit card debts, the great thing is that you may have lower interest rates and perhaps your payments can be tax deductible. The downside, however, is that you're turning unsecured debt into secured debt, meaning that before you just had credit card debts, but now those